Dropbox is still in the lead in the global file sharing market and when it comes to businesses, but obviously competitors are closing in. Is it worth $10 billion?
Absolutely. I mean, there's so much growth ahead for that company. What's interesting is people keep looking at it as storage, but in reality, it's collaboration. And the other companies, yes, they're very friendly. CIOs like those other companies. But collaboration is a consumer issue, and consumers love Dropbox. And Dropbox is easy for them to use, especially when they're bringing their own devices to work. So I see a lot of runway ahead for Dropbox.
Leslie, what are your sources telling you? I mean, you covered Box's IPO, and I wonder, do investors like Dropbox? Do you think they will like Dropbox more than they've liked Box?
The sentiment has certainly changed over the last year. I remember when Box's filing came out, sources kept saying, oh, well, Dropbox's numbers look much better than this. Don't worry, that's the next one to go public. It'll look a lot better that time. Now, here we are a year later, people are looking at Dropbox, and the discussion has changed a bit. People highlight a potential cash burn rate. However, others say they've only gotten through their Series B in funding, and so they still have a long way to go. Now, in terms of an IPO, most people seem to mirror what he was saying in terms of they don't have a plan to go public right now. Dropbox is the type of company where to surpass a $10 billion valuation in the public markets these days is a difficult feat, and what he said about not breaking out profit, that's something that won't really help him achieve those goals.
He did say, though, that he can go public without raising more money. Michael, one of the other things that we're seeing is at Dropbox is some high-profile hires actually leaving, like Ilya Fushman. He's gone on to a venture capital firm. Gentry Underwood, who is the running Mailbox, said he was going to leave, then changed his mind. Should we be concerned about this?
The war for talent here in the Valley is fierce. And the reality is that the technology companies with the best technologists win. And so we're going to see a lot of competition between different companies for talent. The real issue is they still are able to hire great people, as are everybody else. Other companies are having the same attrition issues. The good news is they get great talent, and people find it an extremely exciting place to work. And the proof is in the product. They keep innovating. They keep creating new features that consumers love.
And I did ask Drew about this, a talent leakage question, and he said they monitor close rates for engineers and that they're seeing better numbers than ever. I do want to turn a bit to what we saw with Box today. Box teaming up with IBM to go after large corporate customers. Box clients will now be able to store content in Big Blue's cloud. IBM has also established partnerships with Apple and Twitter to boost its own cloud business. So I asked Aaron Levy, the CEO of Box, about the deal and what's next in the cloud.
The cloud is disruptive in the economic sense and in the way that you deliver value to customers, but it's not particularly hard to deliver the cloud. So I think that most of the incumbent technology vendors will be able to get the cloud and be able to do that very successfully. And it's actually going to be now the new opportunity, and the new competitive market is going to be, what do you do on top of the data? What do you do on top of the information? What do you do on top of the computing in the cloud? Because commodity infrastructure is not particularly interesting. What's very interesting is, what are you doing with that information to deliver more value to customers? And I think you're going to see different points of view from Microsoft, from IBM, from Oracle, and others. So, I think that this is a fairly new market that has yet to really kind of play out.
You know, it's interesting, Michael. There are so many companies chasing the cloud. Yeah. Microsoft, Google, Amazon, Oracle, Box, Dropbox, and Box and IBM are actually competitors in addition to being partners now. Are we going to see more consolidation happening? What's going on here?
They're all trying to integrate as many apps as possible, because the challenge is not getting stuff into the cloud. It's making the cloud smarter. It's allowing users to be able to get out of the cloud what they've already put into it. And so I think we're going to see more partnerships. And yes, people who are fighting in one sandbox are going to play together in another one, especially when it comes to a lot of these things that are shared across applications.
Is this confusing for investors, Leslie? Because it confuses me a little bit.
It confuses me too, and you have to wonder when you look at something like this. It's a great partnership. IBM is a great brand name, but what does it really do for Box's bottom line? That's the question that investors are concerned about, and at the moment, it's not entirely clear exactly how it could boost earnings and how it subsequently could boost the share price. But it seems like it's a better option for them than ceding to the competition. Better to partner with competition, especially as people keep expressing their concerns about cloud storage being a commodity business. Better to partner than die, right?
Right. I did push them on revenue sharing and just how much money is changing hands, and they wouldn't go there. But I also said, why doesn't IBM just buy Box? And Aaron Levy said to me, look, we want to be a big independent company.
I doubt that a big company like IBM can really push the same kind of innovation that a small company can. It's a huge challenge for big companies to be able to act as startups and as we were talking about, hiring the best people and get them to do things that are really going to yield great results for consumers.
Well, the race for the cloud is something that we're certainly going to continue to watch.